Okay, ladies and gentlemen, thank you so much for observing the rules and allowing us to herd the cows in. Appreciate it very much. I wanted to we're going to continue on with the spotlights. Obviously, it's very intense, short, well done, I think. After the panel that we had, it was also very nicely focused on certain issues. But I wanted to link certain themes that have emerged today, specifically the discovery and the development of new technologies, but also the connection to the consumer and the social license and the democratization that the panel was speaking about, that also, Matt also spoke to, the sort of dialogue and the discussion that needs to occur as we develop these new solutions. Increasingly in the investment field itself, investors have started to recognize that it's not just about the arrogance of imposition of technologies on certain populations, but to recognize that food itself requires the active participation and social license that consumers are capable of delivering. So with that, I wanted to bring up a good friend, somebody who keeps me up at these events late at night because he's as debauched as I am. Just kidding, Sanjeev, just kidding. I'm giving you a bad
I went to bed
reputation.
at 11:30. He went to bed at 2:40.
So if I'm a little punchy, you understand why. But Sanjeev has an extraordinary career and is the co-founder of S2G Ventures, which he'll talk about in a second. This is a fund focused on the nexus between solutions and consumer acceptance and consumer trends and consumer tastes. So I'll let him go on from that point, and Sanjeev, take it on.
Thank you. Thanks, Rohit. I think Rohit asked me to talk because I used to tell him I go to food conferences, I go to ag conferences, and I feel like there's similar sort of frames around innovation, but very different applications of what innovation is. And I really want to spend today to talk to you about what we're doing at S2G, our thesis on where the consumer is, and kind of where ag innovation kind of fits into that. Unlike Matt, who did it without slides, I'm going to use PowerPoint as my agent. So we're a multi-stage venture fund in the food and ag sector. We invest throughout the supply chain, so from the consumer to the farm gate. We do various stages, seed stage, venture stage, and we even do growth stage. We just got started about 24 months ago and kind of conceived this about 36 months ago, but been pretty active. We've done about close to 20 investments, 20 transactions that really encompass that entire value chain. And our thesis is our North Star is the consumer. The U.S. food system is a $1.4 trillion system. And we think the consumer is starting to change, and we basically want to feed that changing consumer with our investments. As a food and ag fund, we are very interested to talk to people across the value chain. So we spend a lot of our time talking to retailers, talking to large food companies, talking to food service, so from McDonald's, Chipotle to Cisco and Compass Group, and to aggregators, so the ABCDs, ADM, Cargill, Bunge. The thing that we try to bring to most of our investments, and we've co-invested with several groups here, is we're very syndicate heavy and syndicate friendly. So we've tried to build syndicates across the value chain. So from CPG brands, there's a group of syndicates we're trying to do. In restaurant retail, there's a group of syndicates. In ingredient, and in ag as well. This is our process. Effectively, what we're trying to do is through talking to at the downstream level, so CPG, protein, retail, food service, we're trying to form our portfolio construction and our own thesis talking to these strategics. And so what are they solving for? What are their pain points? And then how do we invest to find solutions for them? Because what they're ultimately trying to do is the consumer. So I often say in the food sector, there's the consumer and there are customers. And that transmission mechanism is, I think, the thing that's changing the most. And the customers are CPG, protein, and alike. In terms of how we sort of work with ag innovation, this is our process. So we start with consumer insights that we think are growing insights in terms of where the food companies are investing in innovation. So it's around transparency, authenticity, sustainability, identity, and new crop selection. And then we work with retailers. What are they solving for? And where is innovation throughout this supply chain? So they're often solving for basket size, basket affinity, velocity, consistency, volume, because generally restaurant, food service or retail is a high volume, low margin business. So they're all around volume and velocity. And then CPG, they're also solving for velocity and gross margin and scale, but the fundamental thing that we think they're solving for is non-promotional repeat customer, which means, that's how we quantify a brand, is you went in there and you brought the same food item twice without the need for promotion and slotting fees and the like. And then the supply chain, what are they solving for in terms of cost, the ability to scale, the efficiency of their infrastructure or new infrastructure? And then ultimately, it ends up being a farmer decision, because ultimately someone has to grow this and someone's going to eat this. And how does that transmission mechanism work? And what are the farmers thinking about? Are they thinking about yield risk? Are they thinking about the ability to adopt new innovation and within the ease of their current infrastructure and their current behavioral patterns? And obviously about commodity risk. And so we think the consumers are changing the food sector. The overall food sector grows around 3%, but the growth rate among some of the themes that consumers are following around sustainability, health, simplicity, et cetera, they're growing at between 10 and 20%. So multi-fold growth from the overall food sector. The health category, the better for you category, reached $1 trillion, is expected to reach $1 trillion in sales next year. We're also seeing food tribes forming, and they're just being formed. 45% of adults claim some sort of food restrictions, food allergy, or other motivations for purchasing food. This sector is around $144 billion, but growing at double digits. And I think as soon as I put up this slide, the next slide sort of talks to it. This is our biggest sort of issue, because if our consumers are North Star, what is a trend and what is a fad? I think 36 months ago, when we're sort of conceiving S2G, particularly at sort of the upstream level and even in that supply chain, I think some of the themes were seen as a fad. I think now, fundamentally, and you see this in the number of venture funds that CPG is releasing, Protein is doing, even the aggregators are doing, they fundamentally no longer think it's a fad. They think it's a trend. And we also obviously think it's a trend, and buttressed by some secular themes that are happening throughout the economy, but also some things that are happening in food specifically. I think in each of our sort of filters when we think about investment, we do sort of try to say, is this a fad or is this a trend? And it's something that, frankly, it's more of an art than a science. I think there are some secular things I'll talk about in terms of the rise of social media, demographic shifts in the US economy, and overall sort of distrust in overall institutions and brands. And I want to focus on brands because I think that's where the feedback loop is happening at a very visceral level, and you can see it in quarterly results of a lot of the food companies and what they're reporting. So I think we're in the age of social media. 2.3 billion active users. What is this doing to overall economy and the food sector? I think it's allowing the ability to build new brands much cheaper than before. You no longer have to be Pepsi or Coke to build a brand in any category. You can do it in food. It reduces the efficiency of traditional advertising. I think we've seen that in politics this cycle. Advertising is no longer the ROI that it used to have. We're much more fragmented as a society. We're much more fragmented as a media market. And it's both posed challenges and opportunities in that. It also creates an ability to be more transparent and translucent. As a grower or a producer or a brand, you can get directly to your consumer and figure out how you want to be transparent or how you want to be translucent. We think sort of transparency is impractical, but translucency is something that I think it has already occurred, and we think it's going to continue to occur. But translucency is sort of revealing what you want to reveal as the brand DNA of what you're trying to sell. So whether it's meat or a center store product or produce, a lot of the brands are trying to distinguish themselves by how they're doing it, not just what it is. This also creates a lot of noise, though. So what is information and what is knowledge? Just because there is information out there and people getting a lot of their news from Facebook feeds, does that mean that it's knowledge? And I think it particularly, I think Matt talked about it today, is for some of the upstream folks, it's backed by science, it's backed by real data, but then how are you managing the transmission mechanism between that to the consumer? Because it's harder to get to that, whether it's sort of divisive topics like GMO or other things. And so it's creating real noise as well. And we think that social media is going to have dramatic implications on supply chain. I was at this sort of scouting meeting for a large CPG, and they were saying, what in your portfolio or outside your portfolio has had a greatest impact on food? And I kind of joked tongue-in-cheek, and it was sort of Instagram. Because what it's fundamentally done is it's created this transparency desire within food. And if you look at some of the data, 45% of sort of supply chain folks believe it'll have a disruptive impact in the next 5 years, social media. 18% believe that it actually will increase costs and lower efficiency. So not all this is positive, but there are some positives and negatives to it. I think the single biggest thing that when we spend time with CPG and downstream food service, this is the biggest topic that comes up, is millennials. Each of these folks are trying to figure out what is their brand relevant to millennials. It is almost like a staid topic for us, because we say, you're with a large protein producer or processor. I was never expecting to have this conversation. They're like, let's talk about millennials. It's the largest generation in history. It's spending more. Its spending power is growing at 18%. It's going to have, and a lot of the downstream folks are paying attention to how they're thinking about food. Just for time, I'm going to go through some of these quicker. I think aging's going to have an impact on our public policy discussions, on taxation, on cost of healthcare, but it's also causing more awareness with the boomers around the functionality of food. This one I think is fairly self-explanatory, but we had an internal meeting where it's a large CPG executive, and they said Congress's approval rating is 14%. Big Food's approval rating is 11%. And so we think some of this is having real impact on the food sector. It's one of the most interesting things about the trend versus fad, and it's a debate we have, it's not settled, is anchoring on affordability. Our entire food system is sort of anchored around cheap food. And the millennials are willing to spend more money on their food. They're not buying cars, they're spending it on other things. Whether that, once they get mortgages and kids, will they continue to spend $8 on an organic chicken? We don't know. But I think it's something that a lot of the downstream folks are trying to understand. Labels are starting to matter more. I think changing demographics around ethnic populations are trying to change things. But the single biggest thing, I think, in this slide is channel dynamics. Retailers want slotting fees, which has been the basis of our retail model the last 30 years, from Walmart to Whole Foods. But more than slotting fees, they want velocity. They want turns in the store. They want people to come in and buy it. If a certain brand is not selling, it's out. The brands that sell are going to win. And the openness, it's not just natural retailers like Whole Foods, it's throughout the largest natural organic chain is Costco. And you're seeing this in the data. Large CPG has lost $18 billion of market share in the last 5 years. Companies with less than $1 billion represent now 45% of all food sales. And you're also seeing this in the M&A data. Last year, about $160 billion in M&A happened in the food sector. Dannon bought Whiteway for 3 times revenue for $10 billion. Campbell's has been very active. McCormick expects 1/4 of their growth to be through M&A. And so I think they're restocking their brand portfolio, I think, right now, and they're going to continue to do it, and Wall Street's rewarding them for it. That's where I think this audience comes in, because when they buy things for 3 times revenue or 5 times revenue, they're buying growth. And growth of some of these supply chains are very difficult, and they're going to need buy-in from innovators, from farmers, and the entire supply chain. I think that's when I think there needs to be a better conversation between the food sector and the ag sector than it is today. I think some of that mechanism needs to be improved in order to do this. There's a survey, the 100 largest, 50% said they're going to change their supply chain and how they're going to source food and ag commodities. McDonald's, decided to do sourcing their chicken differently. That had fundamental supply chain ripple effects from Tyson to the grower, in our view. And this is where I think this is the opportunity. I think this existing supply chain is very good at yield, cost reduction, scale, consistency, safety, and standardization. Obviously, you can always get better. There's always innovation to make that even better. But we are one of the best producing ag economies in the world. So how do we take that knowledge and try to marry up with some of these new consumer trends around identity, transparency, ingredient changes, sustainability? And so this is sort of one sort of thesis we have around ag. So we start with the consumer, but then what are we doing in ag innovation? And so if you look at some of these emerging supply chain themes I just talked about, we think the inputs arena, the technology arena, and knowledge of supply chain in general, we think some of these things around, we think it's more nature-centric methods, alternative chemicals. I don't think chemicals go away. I think there's more of the new generation of chemicals, alternatives to chemicals. Genetics plays a role, soil, data. We also think some of these new ingredients, some of these new crops have to fit within an existing rotation, particularly try to get out of the bean-corn rotation. So how do you incentivize a more complex rotation? I think that's fundamental around genetics, soils, data, equipment, and I think robotics has a role to play here. And I also think, and something that Rohit and I spend a lot of time on, is how do we get grower profitability as the center case for farmer adoption? And I think a lot of growers are bombarded today with a lot of innovation, but how does this lead to profitability, and how do you incentivize business model innovation around this? We've had other models in the energy efficiency arena and other areas where they've sort of helped scale nonlinear adoption of certain products through a financing mechanism or other business model innovation. I'm just going to give a few examples. Terramera is one of our portfolio company, and they really are focused on why are biologics occupying such a low percentage of the market? How do you give growers a better reason, high performance reason, and provide the tools for more sustainable agriculture? And I think their theory is biologics to be more effective, particularly the active, it deals with the delivery technology, which is their Aspiron delivery technology around formulation. This is a deal I think Rohit talked about yesterday that we did with Midland. And this is really around new genetics, incentive complex rotations, and improving gut health. So this is Blue Prairie, which has a new flower that helps with gut health, and it fundamentally could be a replacement for inulin today. But if you're a corn bean farmer, you've got to find an incentive to do this. And it's around grower profitability per acre. And the idea that is flowers like this with adoptions from General Mills and others could potentially incentivize a farmer to have these complex rotations. This is something that Matt talked about, MBA, which is an innovative soil fertility company focused on sort of balanced mineral nutrition, soil biology, and sort of a systems approach to the farmer. They have a very high touch approach. And they're focusing on higher yield, lower unit costs, and higher grower profitability. And what they're doing is they're partnering with food firms in general to help them manage their supply chains. And that mechanism from you've committed to go source a certain product, where are the farmers that are actually going to grow this stuff? And how do you get that mechanism? And it potentially is a new way to grow new processes. And one of the things they do is a business model innovation. And this is kind of borrowed from energy efficiency, which is effectively to not sell on price, but how do you sell on ROI and value? And it's a Solar City analogy, ESCO analogy, and basically they finance the additional cost of the program on half the acres and share in the yield upside and basically guarantee no losses. So obviously they pick and choose which customers and farmers qualify for this, but it's sort of an example of how a business model innovation rather than in addition to their product innovation. That's it.
We're running a little behind, so I'm just going to restrict the number of questions. Of course, one of the questions that has come up is the environment that we're in right now and how that actually provokes or otherwise inhibits the investment world, given the consolidation that's occurring right now. Do you have any comments on that? I know it came up before, so.
I mean, I think there's consolidation happening at the food level and at the ag level. And I think that it'll be interesting to see, because we're also in a low commodity cycle. And see, it'll be interesting to see how growers ultimately respond to some of these signals, because I think they're going to have different signals from different parts of the marketplace. On the offtake side, I think there's going to be new signals from the offtake side, on the commodity side. On the input side, there's going to be different market signals. And I think it's still TBD how consolidation in the sector is going to work. But I think it's an exciting time to be in the sector, because I think on the consolidation on the food and ag side, they're thinking about new supply chains and vertically integrating and be much closer. Unilever's put out public statements around wanting to invest in ag tech, wanting to vertically integrate virtually. So they're not going to buy farmland and grow it, but how do they use some of the innovation for their new supply chain and can partner with folks in this room and other places?
Yes, Charles.
You talk a lot about ag and food. Of course, agriculture is a lot more than food. A lot of what agriculture does is produce non-food products. So I'm curious, I mean, lubricants, cosmetics, every bit of cosmetics in this room,
Yeah.
a lot of it is bio-based. And so how much emphasis are you putting on that side of agriculture? Because it's really an important part.
So as a venture investor, we, in ag and food, we tend to focus on food and feed, and then that entire supply chain to the consumer. We love businesses, though, that have a hedge on one sector. So if you have a technology platform that hits ag and food, but also hits another area. So Terramera is actually an interesting example, because they have a technology that actually is involved in pest control and potentially in household care. And they have a consumer side of their business, which we liked when we invested in that. If that continues to grow, that hedges out the farmer adoption issue. So it takes 3 to 5 years for farmers to adopt their particular product base. They've got an alternative market that they can start to sell into. So we actually love, business that focused on food and ag, but also have a hedge, just if grower adoption takes longer to happen.
Okay, other questions? There's a lot of people standing on the side here. I'd like you to come in if you can. Yes, question? There was a question from back there?
So, you mentioned biologics and that more investment needed to be done, perhaps more on the targeted delivery side. I'm wondering, have you considered that, is there a place to park these biologics once we bring them to market? For example, as crop protection companies, we deal with distribution, and so how do we place this kind of a wonderful product, into that system that already exists? And so it may be come up with the best targeted delivery, but you don't really have a place to put it. As an investor, are you looking at the whole cycle of the market? Maybe that would help channel some of these wonderful products.
I think we look at the conventional channels to market, but we're also experimenting with non-conventional channels to market. So how do you deal with a brand and say, you've got enormous, like Campbell's Soup with Bolthouse. Campbell's bought Bolthouse for a multiple of revenue that was, anticipated growing that supply chain in Bolthouse. Carrots and a few other products. They're, I think, the second largest carrot purchaser, or one of the largest carrot purchasers in Perp. They're interested to basically, how do they work with their farmer partners to push new innovation through? Because they want to scale that supply chain. I think we're at the very early innings of that innovation happening. And so it's TBD, but we're certainly in those conversations trying to make it happen about how we work with downstream brands and bring them closer to ag innovation. Because actually, they're early adopters. They just want to scale this niche brand that they have, that they paid a lot of money for to acquire it. And they're willing to innovate at a level. And it's almost sort of it sort of becomes you kind of skip the farmer in some ways, and you go straight to the end buyer of that commodity and try to get a top-down push. I think we're at the very early stages of that, but one of the things that surprised me in the last 36 months, 24 months doing this, is how open those downstream folks are to working with folks like you.
Thank you, Sanjeev. Appreciate it very much indeed.